All right, everyone, thank you guys for coming again. My name is Jonathan. I'm the host of the Chicago RE Investors Meetup. I'm also the founder of Quality Builders and the managing broker for RE Investors Brokerage. I always like to start off our meetings with a little bit of gratitude. I always want to be grateful for everyone who was able to show up here in person. Everyone is able to be watching online, and whether that's now or in the future. So I really appreciate you guys coming, and it wouldn't be the same without you guys. I also always want to thank A&M Mortgage and Landon Hoon for hosting us. So he's right over there, so make sure you guys talk to him. And then lastly, I just always want to remind everyone that our goal here is just to just FYI that our goal is just to help everyone. I think everyone has the kind of same goal in mind, same mindset, and we all have that kind of most important next step that we're looking for. And a lot of times I've found that getting out and networking is one of the best ways to take those steps. I know it can always be a little uncomfortable. Recently I was on a podcast. I got super uncomfortable. He asked me a question, and it stumped me even though I knew the answer, and fear was what kind of held me back from responding the way I probably should have. And the question was like, why do you do what you do? And instantly I got scared. So let you know, we all get scared. It makes a lot of our decisions. But I said something like, oh, well, I do what I do because I like to help people, and the more you get, the more you receive. I'm like, oh, that's just not the right answer at all. And so for me, I actually texted him back. I was like, hey, Ray, can I come back onto the podcast and just do the front section again, just to restate, why I do what I do is just because I feel super blessed and that I've gotten so many resources, here that so many other people don't have. It's actually my duty to go make a ton of money, but not so I can have a ton of money for myself, but so I can give a ton of money away. So that's why I do what I do. I also like to bring a book every time and give it away. Can anyone here tell us why they do what they do? And they get Ed Milet's book, The Power of One. Really, really good book. Yeah, top 3. No one? Yes, Aaron.
I do what I do. Well, I guess I do a couple things. CPA and real estate investor, but I do what I do to gain financial freedom for myself, but also to help others on their path as CPA, and then ultimately once I'm financially independent, kind of want to play it help out. At one point in the future, create make an eco company or something else.
That's awesome. Thank you so much for sharing. And you got a free book. So yeah, Aaron just said like his goal is to get to financial freedom and help other people get to financial freedom. And then hopefully once he gets there, he's able to kind of work on some environmental things to help save the world. That's what I heard at least. Yeah, so the other 3 things I always just like to touch on every meeting is I think there's just 3 most important things that we can do to be super successful, whatever we do. And they usually start out in this order: educate and read. So Aaron, you can start by reading The Power of One more. It'd be super helpful. And then network, which you guys are all here doing, and then taking action. So I think we're actually covering all 3 of those in one swoop. Coming to a networking event, I can personally say when I went to every networking event in Chicago for 2 years, that made a huge dramatic impact on my life, and recommend it to everyone. Maybe not going to everyone every week, but going to as many as you can, because most of the time the people in this room or someone is the next person you need to meet to take to the next level. Yeah, with that said, I think everyone comes to these events. It's a little nerve-wracking talking to new people, so don't be afraid to get comfortable being uncomfortable. One of my favorite sayings. And this is always a safe place to ask questions. So if you have a question, I know myself, I always get questions in my head. I'm like, I want to ask this, and I'm always too timid to ask it. So if you have a question, just ask it. Like, no one cares, no one's judging you. If anything, you'll be better off and happier that you asked it at the end of the day. Yeah, and so yeah, networking as well. I met both these guys through networking. So you can see it all kind of goes full circle at the end of the day. Super happy to have Mike Tomasetti with First Federal and Zach Guizar with Verve Community Bank. I'll hand you guys each the mic. If you can just tell us a quick little blurb about yourself. Who are you, where you're from, where you live, how you got into real estate, and your favorite hobby. There you go first. Yeah, go ahead.
Well, good morning, everybody. My name is Mike Tomasetti. I work for First Federal Savings Bank. We're headquartered out in Ottawa, Illinois. We have about 13 locations here throughout Chicago footprint. I've been a commercial lender I've been in banking now almost 15 years on the business or commercial side for over 10 years altogether. What I like about what I do is I get to interact with different individuals and learn about different businesses and different goals and careers and just strengths, right, of different individuals and what they're looking to do, within the next few years here. And I just really want to be a resource for you guys or whoever I meet. Very passionate about what I do. I'm a people person. I would say my biggest hobby, I live in St. Charles, Illinois. My office is in Elgin. I have a four-year-old and a 7-year-old son. I played high school baseball and then played college baseball, junior college baseball. I'm a coach and I'm involved in the Wasco baseball organization out in St. Charles. And it's my favorite thing to do is to coach and develop and really just be a role model for, kids from the ages right now between 4 years old and up to 10 years old. So I coach both teams. So at night, if you guys are trying to get a hold of me, I will answer my phone on the baseball field. I might be coaching third base for a t-ball game or for a minor league game for my 7-year-old, but pleasure to be here today and looking forward to getting to know a lot of you here today. Thank you.
Hello, everyone. My name is Zach Guizar. I'm a commercial lending officer at Verve Credit Union. We're actually headquartered in Oshkosh, Wisconsin, but I sit in Bridgeport, right there on 35th and Halstead, right down the street from the Sox Stadium. So I'm a Sox fan. I'm originally from Arizona, so I moved to Chicago about 5 years ago. I've lived in various parts of the city, but right now I live in Pilsen about a year and a half. And so I started commercial banking right out of college. So it's been like 10 years now. Started out in underwriting, doing the credit risk side, and built a credit department at a CDFI here in Chicago. And then kind of just wanted to go more towards like the front end business development. And the reason I wanted to do that is I'm all about hearing stories from these investors and all these business owners and everything like that, and the success stories and everything, the failures. But I want to be part of that story to say, hey, like my lender Zach has helped me, grow my portfolio from 5 multifamily to 20. So that's why I do what I do. Hobbies. Playing with my dogs, I guess, if that's a hobby. And then I'm a big self-proclaimed foodie, and also I love cocktails. So I'll try to see the hidden spots in Chicago.
Sweet. I got no pets and no kids for the record, so that's why I was able to go to every possible. So kind of commercial lending, right? So last month we talked about working with commercial brokers. This month we got commercial lenders. I kind of want each of you just to not give a sales pitch, but kind of give us your typical bread and butter loan, what that looks like. Maybe talk through a couple of terms that people may or may not be familiar with. If we can kind of like break those down, what DSCR means, any type of other terms that, these, our group needs to know so that when they come to a lender like yourself, that they can talk intelligently. And if you can't talk intelligently, I just say you don't know and ask. No one really cares. We want to go first, Mike?
Yeah. No, thank you. I would say, our sweet spot, I like to call it at First Federal Savings Bank is, and I've talked with a lot of you earlier today about this. A lot of you asked me about the 1 to 4 space and about the multifamily space, right? The 5+, right? Those are both, we have a lot of different financing opportunities in those spaces. We're very competitive. I will tell you, that's the one thing when I think about our bank and what sets us apart from other banks is we're very competitive. Whether it's the origination fee, first of all, right? I mean, that's just something that we're very efficient. That's something that definitely comes up when I think about our bank, right? So I had a lot of discussion with some of you guys earlier on how long would it take from start to finish, to close a, financing opportunity that you guys might have, right? So if you give me the package, the financial package in a timely manner with everything, we could probably have a decision within 2 weeks from start to finish on an approval for you. And I did talk, a little bit about then we're just waiting for the appraisal, right? So the appraisal on average, depending on what company we choose, might take anywhere from 1.5 to 3.5 weeks. So on average, 30 to 45 days is usually a good time frame for us to get through the full financing request. My CEO is actually in the audience over here, Connie Rodiger. So she's on our team that our credit team that decides on the decisioning of the loan. Debt service coverage ratio, to Jonathan's point earlier, we're usually looking for 1.2 times on the property itself. So let's just to put it in easy terms, right? If the payment is $10,000 a year, is the property bringing in $12,000, right? That's 1.2 times, right? Just to make it easy. We also look at it from the global cash flow perspective. I know there was a lot of questions earlier about different investors involved in different projects. Anyone with 20% or more ownership would have to be on the loan. They would personally guarantee the loan through our bank. We're looking for a global debt service coverage ratio as well as 1.20 times, right? So that's based off everything that you have out there with all of your payments.
Can you talk about what that means? Global cash flow? What
What is global cash flow?
Yeah.
Yeah, so global cash flow. So as we gather your financials, we're gonna ask for your financials, not only your personal tax returns, but any business tax returns that you have as well, right? We'll take a look at all of your debts, right? We'll take a look, we'll pull your credit, we'll get a good analysis of all your debts out there, and then and all the payments you have to make with everything that you're involved in. And the ratio that we're looking for is over 1.2 times. So you need to be making, let's say, for instance, you have $100,000 in payments between everything. After all said and done, you have to be making $120,000 to have 1.2 times that. So, that's just something that a lot of people, they'll come to me and they'll say, Mike, do you guys offer a debt service coverage ratio loan? No, we don't. We don't just base it off of the property. We're going to look at the full financial picture for every individual. So we're going to look at the building or the property at hand, first of all, make sure that that covers at 1.2 times. And if it doesn't, right, I know there's a lot of projects out there where you guys will have this opportunity on the south side, and here's where the rents are now. In the long run, though, this is where they should be. These are the market rents. Great. Come to us with a pro forma. Come to us with a business plan. Tell us what you think is going to happen in the future. What are market rents in that area? How can you make this to where it will be 1.2 times? Because right now it might only be 0.83, right? It might be under 1-to-1, right? So just do your homework up front. I know a lot of you guys do, which is great. The main thing as a lender, I see, to make the process as most efficient as possible is once you come to one of us for the opportunity, we're going to ask you for everything. Get that to us in a timely manner, and then we'll work, internally to have a decision for you. I talked a little bit about origination fees earlier. Origination fees on our loans are 0.25% on our regular loans, 1 to 4, multifamily, whatever it might be. If there's a construction component to the loan request, it's usually 0.5% because there's more involved, right? There's more involved for the bank. There's more hands involved, more hours worked on it. One thing I really like about our bank is something that we do. We will do a construction to permanent loan all in one loan, right? Our loans are 5-year balloons. So say, for instance, you come to me and you say, Mike, I have a property that I'm interested in, and, it's a 4-unit, let's just say, and, this is what I'm going to do to 2 of the units or 3 of the units. It's going to take 6 months to complete, right? We would structure the loan. The first 6 months would be interest only for you. And then from there, the additional 4.5 years would then convert over to principal and interest. Okay. So it's all in one, it's one closing. I would be your relationship manager on that. You would work through me. I'm here to be a business partner and a resource for all of you guys. So, I mean, that's a little bit about a lot of different things we do. Someone asked me earlier, what type of loans do you do? And I basically told them the only ones that I don't do are for primary residence. So you guys know. And someone said, what's your sweet spot? On multifamily, they asked me earlier. What's the difference between a 5-unit and a 20-unit? There's not a difference there on our end, as long as everything adds up and you've got a good business plan behind it, right? So it's going to be the same interest rate. It's going to be the same origination fee. You're still going to have me as the relationship manager. Yeah, so I mean, that's a little bit about that. Anything else you want me to mention?
No, yeah, we can run through the exact stuff.
Okay, perfect. Well, awesome.
Yeah, we're pretty much similar when it comes to, strength of the sponsor, property cash flowing, strength of the sponsor. That's basically like almost 60-40, 50-50 when it comes to deals. And kind of going back where you were saying about the multifamily, just to put a little bit more specifics on for 6+ units, we'll do a 30-year amortization on a 5-year or 7-year. Well, 7-year, we're kind of holding out the cheap credit offers, kind of being sensitive for how rates are, as everyone may as well know. And then, but yeah, we do non-owner occupied real estate. So if you have a portfolio of single family homes, I know an investor over here, we'll finance that. It's just any investment real estate. My pipeline's full of multifamily deals, but also industrial, commercial, mixed use. We do new construction as well, acquisition, renovation, everything like that. We'll go up to 85% loan to cost on the construction piece, and then 80% LTV. And then we also do refinance, cash out refinance, but for the cash out refinance, we only do 75%.
So when you say 80 or 75% LTV, can you just lay out exactly what that means?
Yeah, so $1 million property, you get a loan for 800,000. So you put in 200,000 in equity.
Anything else?
That's it.
Awesome. All right. So we kind of talked a little bit about your guys' terms, qualifications for borrowers. Really the big thing is mainly experience and what they have in the bank for the most part, right? Would you say there's anything else that you want to touch on as far as that goes, qualifications? No, good. Okay. Here's a better question. So from the commercial space, which both of you guys operate in quite a bit, what's the best way for someone who's newer to get a hold of you and put their foot in the door?
Yeah. Oh, so you haven't done any commercial real estate loans? Okay, yeah. I was actually talking to an investor earlier, or a to-be investor, and I think the best way, and what I've learned with a lot of my investor pool that I work with and help finance their properties, just network and find someone that says seasoned investor that has a portfolio of at least 5 or 6, and just learn from them. Be their mentee. And then I have an investor who said he's about 3 years older than me, and he has a partner that's about in his 50s, family. Guy has 15-20 properties throughout Chicago. He's like, I was following this guy around for 12 months and just trying to get a deal together, trying to like, hey, we should be partners, we should be partners, we should be partners, being persistent. And then finally the guy's like, all right, let's do it. Let's just go. And then now that guy that the investor has, he's got 7 or 8 properties, and he thanks it because he had a partnership with somebody that's more seasoned, that's done it before. And banks and credit unions and other lenders will look at that and say, hey, like, you own 50% of the properties, but look, these properties are cash flowing, you improved on them and you manage these properties really well and you maintain them. So just find somebody that's seasoned. I think that's the best way to go. That's just to learn from them and then hopefully partner with them.
Yeah, I don't really have much to add on that. I mean, I agree with that. I will say though, I do have a lot of conversations with investors or, just individuals that are looking about getting into investing, and, we'll give them some of that feedback. And, what I like to do then is follow up with them. I'll put it in my calendar 6 months from now, a year from now, just to see how they're doing and how that's looking, progress. You talked a lot about goals earlier, Jonathan, right? And different things. So just to make sure that they're still on track, because first of all, what that does for me, you could have a conversation on day one with someone and they say, hey, I want to invest, I want to do this. Well, when I talk to them 6 months from now, I want to see what plan they've put into place, because then that shows character. We talk a lot about character at the bank, right? That's one of our core values there, right? And, if we want someone as a business client in the long run, right? So 6 months from now, well, tell me what you've done from day one till 6 months or 12 months or whatever it might be to be on that right path, right? To become an investor in the long run. So I really think that shows a lot. That's someone that I determine, yeah, I want to work with them in the future, right? When they're ready. So.
Perfect. Totally agree. Yeah, partnering is a big game changer. I know. And then just kind of following like that stack method. I know that was kind of my path is start with, you know, a 2 to 4 unit, go to a 2 to a 4 to an 8 to a 30. That makes a big difference. And yeah, partnering is a game changer. I don't think you can ever give away too much equity on a big deal. I know I'm happily giving away more equity than I thought was where I thought it was too much. And it's just like, once you're able to partner with someone who's, you know, light years ahead of you, kind of the roof really blows off as far as deals you can go and get. So you can go from 30 to 100 so much quicker that it's just being kind of short-sighted to think that you deserve more equity when they're coming in and bring so much more experience that you don't have. I know both of you guys are kind of more local regional banks. What would you kind of describe the benefits of working with you guys versus like kind of a bigger bank like Wells Fargo or Chase or something like that?
So I worked for Fifth Third Bank for 12 years, and I can tell you exactly why. Okay, so they were headquartered in Cincinnati, Ohio, or they still are headquartered in Cincinnati, Ohio, I should say. So what I really enjoy about my bank is there's, for every opportunity, right, there's an internal discussion between myself, Connie, my CEO, and then my chief credit officer, who's not here. When I worked at Fifth Third Bank, we had this grid, right? If you didn't fit in this box, it didn't matter. You couldn't get a hold of anyone in Cincinnati to say, hey, well, let me tell you the story behind this and why this investor, why this looks like it does right now. They didn't care, right? And then from another point, customer service wise, when you needed to get a hold of someone, it was so frustrating for me as a banker to try to get a hold of someone when I knew we couldn't make a decision locally here in Illinois, right? So working for First Federal Savings, I mean, I would be your relationship manager, right? I'm your point of contact. Like I mentioned earlier, I'll answer my phone on the baseball field, right? You might hear a bunch of screaming kids, but it's going to happen, right? So you'll get an answer. You know, I think the process is just a lot more efficient. It's a lot more personable. I think you want to know who your banker is on the other end, right? And, you know, you get to know someone from day one when they first started investing to 5 to 10 years later. You've got the full story on that individual, right? And you've got a banker that's on your side that's going to go to bat for you for any new projects that might seem out of the ordinary and might not make sense. Well, right? Well, there's a story behind that, and we can really articulate that in the long run. So, I mean, I think that's the number one reason you want to work with a smaller lender, you know. And like I said, I spent a lot of time for a big bank. So I had a lot of frustrated clients, and I felt terrible because I couldn't help them with certain things. So there was only certain things that I can do from my seat, right? So that's what I would say.
Yeah, I mean, pretty similar, and I'm sure it's with like any smaller regional or local bank is my, you know, even though my boss and the chief credit officer sit in Oshkosh, where we're headquartered, I just ring my boss and say, hey, like, we got this deal. It's competitive, but I think we can get it. Pricing, strength of sponsor, everything's good, everything checks out. He's like, all right, well, you know, we have to get that margin, right? We have a spread that we have to make. And he'll just go next door to the chief credit officer, hey, Zach's got this deal, we should do it. This, you know, we're trying to get into the Chicago market, be more aggressive. And that's pretty much it. It's like we can work kind of like it's similar to Mike was saying, is we can get deals done because we're closer with the chief credit officer, the major decision makers. And also with us, it's like you said, relationship based. I have a separate cell phone for all my clients, just so I can keep work and personal separate. And I'm always on the phone, texting, calling. I had an investor call me today, see where we're at the underwriting. Got to call him back. You know, called me right before I came in here. But yeah, you know, we're more relationship heavy, relationship based. You want to be part of the story.
Any negatives to working with a smaller bank?
I would probably say the risk tolerance. The appetite is not going to be as you know, the tolerance is not going to be as low as it is at these bigger banks because they have larger asset base. They go into the public markets if they ever have liquidity issues. With us, it's, you know, we're a credit union, so we're a financial cooperative, not for profit. We operate a lot differently than how banks and those public banks work. So, yeah.
What's the difference, big difference between credit union and bank?
So the credit union is basically, when you look at a bank, they have stockholders who are either, if you're a small regional bank, it's going to be these ultra high net worth guys, private money that are, helping fund these deposits and everything like that. But the credit union, the stakeholders, the stockholders is the member. So that's why we're kind of a little bit more on the kind of higher tolerance. We kind of have to, or lower tolerance, I should say. We're a little bit more credit risk type of. We should be more aggressive, and I'm trying to get my chief credit officer to do it, but to be more competitive. But yeah, no, it's basically the basic is that the stakeholders are the members of the credit union, whereas for the bank, it's stockholders, whether that be the public markets or the private markets.
Didn't know that. Cool. Who's got some questions for these guys? Oh, was it?
That's always happening.
Anyone else while we're looking? Andrew? Yeah, I'll repeat it. So what do you got?
Would you be open to walking us through your underwriting process? For example, how would you look at a stable operating asset versus value add type of deal that's being brought to you? Value add meaning a property with a low market rent, right? How do you look at income and expenses for these two types of projects?
So the question is just basically, how do you evaluate a kind of cash flowing asset versus something that's distressed?
Basically.
Okay.
Yep. Yeah, basically, so what the underwriters look at, and I have some experience, I have 9 years in credit underwriting, and you have to look at what the market's like and what you can get rents up to on a property. And you also have to look at the sponsor. Again, going back to the sponsor, are you experienced? Do you have experience working with these types of properties that are distressed and from a class D property and improving them up to class C or class B? And you just have to have the experience and know how to manage and maintain a building and everything like that. So you have to look at the fundamentals with the gross rents and what else, how else can you build the top line. And then you just got to be really good at managing the expenses. Whether that's cutting property management companies and doing all the management yourself, or finding and looking at subcontractors that can do work for you that can basically make it to the minimal cost or the optimal cost when you're improving on the property.
Yeah, it's pretty similar with us. I would say the projections, your pro forma that you put together, we will put a lot of emphasis on that, of course. We want to see strength of the sponsor again. We'll want to see a nice, history of the sponsors involved, right? And their experience, what they've done in the past, that they've been able to do what they are saying they're going to do on this new property in the future, right? We will base it off the pro forma, off all that adds up, right? And I definitely think there's not much more, like we talked about earlier with the different sponsors. Keep in mind, anyone with 20% or more ownership will want to see their bios and their information and their history, in the industry, of course, as well. And we'll base everything off that as well. So.
Well, Brandon.
Zach, you mentioned you guys are doing 80% loan to value on deals right now. What qualifies a deal to get 80% loan to value? We just look at a deal that when the mortgage broker, you looking to get about like 68, 69% loan to value. I'm just curious, especially today's market, how are you guys looking at 80% loan to value? How your guys' eyes, what makes the deal qualify that much better?
Yeah, so question is just what deal will qualify for a loan to value of 80%? And then I'd also just add, where are you guys doing deals? Is it only here locally, or where else can people find and easy do these deals?
Yeah, so 80% loan to value, we kind of, that's what we say in the front end, which we do. And I think I've seen one property, but it all goes to the underwriting, and then once the appraisal comes in. So there's times where the appraisal doesn't meet the value that we're expected, so we have to lower the loan amount. So I would say appraisal at the end after approval dictates what the real true loan to value is going to be. And then what was the second question?
Where do you guys do business?
Oh, we're pretty much everywhere. So Chicagoland, the way we do it, and it's kind of Chicagoland, and we're also in Wisconsin. But I do have, I have a couple investors that are based in Chicago or the collar counties, but they're doing deals in Indiana, like northern Indiana, Eastern Indiana, like right outside Indy. And pretty much anywhere in the Midwest, but our kind of thing is the investor or the asset has to be based in Chicago or Wisconsin.
So I actually, in this packet here, in my folder, there's the loan to value guidelines on all my different properties on the last page. But we do go up to 80% on most as well. The appraisal definitely will dictate that, of course. But yeah, that's a little bit about us. The only one, construction lending, it's typical. I mean, we're between 75 and 80%, right? Yeah, so but for the most part, we're able to do 80% as well. And then our footprint, we're here in Illinois. We're also pretty much in the Midwest. So we'll do deals in Indiana, Wisconsin, the surrounding states here as well. So.
Hey, you gotta watch what you say with the ball.
I know.
Any
Right.
other questions?
Has the recent interest rate hikes impacted your business or some projections, predictions you have on?
Awesome. Yeah, everyone's $1 million question. What's happening with your business with interest rates and what's gonna happen in the future?
My business has been good. It has. I mean, we've been lucky, I'll say, but we've had a lot of good opportunities that we brought to the closing table. There's a lot of investors that we've been able to help. There's been a couple individuals or clients that I've been working with for a long time now, and properties that they were interested in have fell through for one reason or the other. Someone outbid them, whatever it might be. I think what's really good with us is that our pipeline, we make sure to keep in touch with all of our clients or prospective clients and try to help them through as much as possible. But interest rates are what they are right now, right? They're increasing. It's funny you bring this up. I mean, there's been a couple clients that I've been working with. There was actually a client last year who there's a property in 46th and Langley. All right, so you're familiar with that area, right? So the Bronzeville area, right? Okay, and absolutely, a great area, and he's been kicking his feet around, he's been, procrastinating a little bit. He'll tell you the same thing, right? On an opportunity. And, I had an honest discussion with him the other day, and I said, John, when we were talking about this last year compared to now, interest rates have changed a bunch. And, he told me, he goes, Mike, I was on the treadmill this morning. I was thinking about it. And he goes, I got to do something sooner rather than later, because things just seem like they're just going to keep on going up, so. And I actually had the same conversation with a business client recently who owns a construction company. He's looking for a line of credit, working capital, and he's been, I've been waiting for his tax returns for months now, and I follow up with him consistently, and Mike, I'll get him to you. I'm busy. And, a lot of people are finally realizing that, hey, this environment we're in, it's just going to keep increasing. Right. So, I believe I just gave him some honest feedback. I said, if you really are serious about doing this, let's get this done now before we're having this conversation again in a month, talking about, or 2 months or 3, on how much higher everything's going to be then. Right. So, but it's been, and I think a lot of individuals, are starting to really think through things. And if they're serious about doing something, they need to do it now, so that's kind of what I've seen lately.
Yeah, no, pretty much similar. It's a lot of trading activity going out there. So I'm really busy, especially in this last month. I got hit up by 3 or 4 different investors in one day. Just through my broker contacts, and they all know each other. It's all in the same ecosystem. Everyone knows each other. But with interest rates, I was talking to an investor one time, and the one that's currently I'm doing a deal with. He's like, nothing's going to get cheaper. So I'm going to buy it with rates and construction, because he's doing new construction on the west side, mixed use. And he's like, nothing's going to get cheaper. So I want to get it at the lowest price. It's just going to get more expensive. Same thing with rates. So I was like, let's do the deal. And I think with interest rates, I think at least for us, it's the deviation is going to be between 15 and 20 basis points of kind of the range of what we're offering. That's straight from our chief credit officer. And I think my prediction, I'm not an economist, but I studied it, and I think the middle of next year, it's gonna be a different environment. Much different. So from an interest rate perspective. And hopefully still then in Chicago, there's gonna be the same trading activity that's been going on. And it's been a lot more experience or my ears and what I've been hearing is South Side, West Side. Just because there's a lot of government money that the city's putting in there to revitalize it with the Invest Southwest, and more investors want to go there.
Yeah, I think the cool thing too is, and correct me if I'm wrong, but like interest rates, residentially versus commercial are two different things, right? Commercial loans aren't completely affected by what's happening with prime, so it's a little bit cheaper typically to get your commercial loans than your residential loans. Yeah, and I think the other thing about this environment too is, you know, being real estate investors, real estate or interest rates going up is like, the more we can be creative with our deals, the easier things are gonna be, right? Sellers are always looking for something, and usually it's not always money. So the more we can figure out what they need, the easier things are gonna be on our end as the investor. Any final questions? Chris, right?
Mike, it seemed like such a relationship, guys. How much business do you get from the ball fields? You're out there.
All right.
You're out of church, you're out of the ball. I mean, how much do you get just between you and smiling and shaking hands a bit? And I've been saying for Jack and I think we ran the event a couple months ago, you guys are out in the community. But how much of an impact is that making on business?
Yeah, so questions, these guys are both good looking guys. They talk to a bunch of people. How much business do you guys get from that?
Yeah, I get a bunch, probably about 95% of it from, so I'm on the Wasco for the baseball organization. I'm on the board of directors there. So we have 900 families just in the St. Charles, Geneva, Elgin, South Elgin, Sycamore, that whole area right there. Yeah, I get a bunch of opportunities from there. I sure do. And then, yeah, I mean, that's the name, that's honestly what it is. I mean, my business and why I've been fortunate to still stay busy with everything that's been happening is, you know, I just have a lot of referrals. I meet a lot of different individuals, and I think it also goes back to the customer service that we provide. And if we provide a good experience for one individual, right, word of mouth, it's going to spread, right? Go call Mike over here, and I'll get calls, and oh, so-and-so told me to call you. Oh, great. How are you? You know? So, yeah, it is. I mean, it's very fortunate for that, and yeah, do well with that. So that's definitely been a blessing.
Yeah, basically, you know, kind of, I'm gonna repeat what my boss told me, is like, it's more about selling your brand and yourself to the, you know, to their customer. You know, Verve is we're just a financial institution, but people can go anywhere to any bank or any local bank, but it's all about you. You gotta focus on selling your brand, being genuine, being transparent, being responsive. I have a lot of investors say, I can't get my lender on the phone. It takes them like a week or 2 days. I'm like, well, I'll shoot you. I got a lot of time. I only got 2 dogs. I have no kids. So I'm dedicated to the job, and it's just that's what it is. But kind of going back, just being genuine, not lying, not selling something that you can't sell. That's all it takes. And it's funny because a lot of lenders out there don't comprehend that. And I don't know why, but it's all about being genuine to your customer.
Great, awesome. All right. I think one there. So yeah, thanks again for having you guys here. You guys are here in person. Definitely make sure you come talk to Mike and Zach and step your game up and do some bigger deals. That's it.